Hey guys, this is Justin from nextbigtrade.com. I was taking a look at the stage analysis screener this weekend, and I want to go over some of the things that are showing up on that tool. But first, I want to talk about stage analysis, and you can go to this page on my website at nextbigtrade.com, the stage analysis page. But the most important um, tenet of stage analysis is when the overall market is in a stage 4 decline. It's time to get into cash and be very defensive and basically, be mostly out of the market or entirely out of the market because this is where devastating losses can occur. Right on my page, I say the current stage of the overall stock market is extremely important when determining how much money to trade in the market and whether to even trade at all or to stay in cash. When the overall market is in a stage 4 decline, most stocks will also be in a stage 4 decline, and that is a period where a trader should play it safe instead of facing potentially devastating losses in the market. So this is really the key to making money long term in the market, is not having these devastating losses that set you back so much that it takes you a while again to make back the money that you lost. So this is very critical, and this is really what drew me to stage analysis when I first read Stan Weinstein's book, because during the 2008 stock market collapse, it was very clear that the market was rolling over into a stage 4 bear market, and just by knowing stage analysis and trading the system, you would have completely avoided that destructive bear market and then been in position to make huge profits in 2009 and 2010 when the market based out and started launching into a new stage 2 uptrend. You can even see some of the chart. I need to update some of the charts on this page, but like, for example, right when, like, this is Caribou Coffee, which was a huge winner in 2009 and 10, but this stock started basing out, as that bear market was completing, and then all of a sudden launches into stage 2 on monster volume, and this is where you start making huge profits in the market. So 2008 was a period of destruction, but it was also an amazing gift because the returns right after 2008 were unbelievable. I remember trading stocks in 2009, and it was like, shooting fish in a barrel. Like, you could just buy anything that was starting to break out on big volume, and there was, huge advances. So going back to the stage analysis screener, so you can use this tool to really understand very quickly whether the market is healthy or whether we're getting into some serious trouble. And basically right now we're getting into some serious trouble. So I'm on the indexes page, and I've sorted by stage 4, and we can see, like, the foreign and emerging markets obviously all year have been in deep trouble, have been in stage 4 bear markets. Commodities have been in mostly bear markets for a long time now. The problem now is that the U.S. markets, like, look at the breadth of the NASDAQ, the New York Stock Exchange, have most stocks now are in stage 4. The S&P 500, if you add up stage 3 and stage 4, like 60% of stocks are basically topping out or are in decline versus like 40% that are still rising. The Dow is actually the strongest index, and that's usually bearish because the Dow is comprised of a lot of defensive stocks and also big cap stocks. And when the market's in trouble, money tends to move towards defensive and larger cap stocks. So that's why the Dow is outperforming. And U.S. sector wise, the only things that are still in stage 2 are staples, utilities, and healthcare, and everything else is basically topping out and moving into stage 4. So there's a lot of super bearish things going on in the stock market right now. If you go to the health page, you can see that very few sectors are strengthening over the last week. It was all just utilities and gold a little bit, and most things are weakening. And then what I often do too on this transitions page is look at, you know, the amount of stocks that are moving into different stages. And like if you go to stage 3, this is a huge amount of stocks moving into a stage 3 top, and then stage 4, again, a large number of stocks where very few stocks are moving into a basing phase or moving into stage 2. So this market is controlled by the bears right now. One thing that I'm looking at for next week, over the next couple of weeks, is whether the QQQ can stay above 170. We've talked about 280 on the SPY as critical to, if the market retakes that level, then we can start getting more bullish again. But, you know, SPY is still below 280. If QQQ takes out 170, I think that's going to be super bearish because, you know, above 170, we're technically still in an uptrend. And this is like going to be like a support test of the January and February highs. So if we take out 170, this market's in serious trouble. And really, this tech stocks have been leading the market, you know, tech stocks and cannabis. So if tech stocks roll over, then we're, you know, we're in trouble. And a couple other things, the home builders have just been absolutely annihilated the last couple of weeks. This is very scary, and you know, they're down like 24% for the year now. So seeing something like this happen is not good for the overall market. The same with the material sector, got hammered pretty bad over the last couple of weeks, and now, you know, has violated all support levels and is definitely in a stage 4 now. So again, we're seeing a lot of, you know, negative developments in the market. And going back to the stage analysis page, again, the most important thing to your long-term success as a trader is to avoid these big declines. So I would definitely recommend, if you haven't read my stage analysis page, to definitely check that out. And then if you haven't read Stan Weinstein's book yet, now is a great time to do it, because this material is critical to really being successful in the stock market. And I reread this book every year, even though I've read it, you know, too many times to count now. But I even find good nuggets every time I go back to it. So I'm going to be reading this book again for the rest of the year, and maybe sharing some, you know, more insights that I get from this time around. But I would definitely recommend going out to Amazon.com and getting that book. So we'll see what happens next week. Definitely leave some comments on this video if you got anything to say, and we'll be talking to you later.